Good morning, everyone, and good afternoon to those who are joining us from the East Coast. Happy New Year, and welcome to our first Resources Rising Stars Investor webinar for 2023. My name is Nicholas Reid from Reid Corporate, and it's great to be back for another year of regular updates and news from emerging and mid-tier resource stocks. Well, it's been a buoyant start to the new year for the gold sector in particular. Gold in US dollars has put on over $100 since Christmas an ounce, and it's up around 12% in the past 6 months, currently trading at around $19.26 an ounce. There's also been a marked uptick in M&A activity in the junior and mid-tier gold sector, both towards the end of last year and early into 2023. It's against this backdrop that we're delighted to feature up-and-coming gold explorer and developer Astral Resources, ASX ticker AAR, with us this morning. Astral has developed a resource inventory of 1.15 million ounces at its Mandilla and Feysville Gold Projects, both located on the doorstep of Australia's gold capital, Kalgoorlie. Fresh from another big resource upgrade at Mandilla just prior to Christmas, the company is hard at it again in 2023, with 2 rigs operating at the Feysville project as we speak. Astral is focused on continuing to rapidly grow its inventory as it approaches the critical mass required to support mine development. To tell us more, we're delighted to have Astral's Managing Director, Marc Ducler, join us this morning to give us an update on the company's recent progress and outlook for 2023. Before we get going, a reminder to everyone who has tuned in, if you'd like to ask a question after Marc completes his presentation, please submit it using the Q&A tab on your webinar browser. And just a reminder, please remember to log your questions while Marc is talking so that I can put them to him during question time. So with that, welcome Marc, thanks for joining us this morning, and please take us through the Astral story.
Thank you, Nicholas. And once again, good morning to all those of you joining us from the West, and good afternoon to our colleagues over in the East. So I would like to spend the next 10 to 15 minutes providing an update on our flagship Mandilla Gold Project, the recently published Mandilla resource estimate, and what our plans are for the first half of 2023. As some background, our projects are located in the Kalgoorlie-Kambalda district. This is prime real estate for a significant number of gold mines, and more importantly, commercialisation of those gold discoveries. Mandilla is positioned adjacent to the Coolgardie-Esperance Highway. It's only 22 kilometres from Goldfields' 4.7 million tonne per annum St Ives gold mine and 22 kilometres by road from Kambalda. We recently announced that Mandilla had surpassed the million ounce mark with our 4th consecutive mineral resource estimate. In December, we announced an MRE of 30 million tonnes at 1.1 gram per tonne for 1.03 million ounces. The resources at Mandilla have grown an average 28% every 6 months for the last 18 months, and we'll be drilling again at Mandilla before the end of January. As we build our understanding of the controls at Mandilla, we're getting better at targeting the high-grade mineralisation, and we're especially finding that at Thea. The last resource update proved that we added 250,000 ounces at a discovery cost of $16 per ounce. 2022 saw us complete 45,000 metres of drilling, and as we speak, we have a diamond and RC rig turning on site at Feysville. We remain absolutely focused on mineral resource growth. We are fast approaching the scale that would allow us to develop a standalone processing solution, and we continue to progress the technical work that will support advanced mining studies. So with the board and management team, these guys are well presented in all the technical fields that matter. Our management team has had success before, and we achieved that success by doing excellent technical work, and we continue to do the same quality work today. Now, the image on your right shows Mandilla in a close-up view on the local area geology. The tenement package is 14 square kilometres, and as the opportunity presents, we're looking to grow this footprint, and that's to ease the congestion for the required surface infrastructure for a future mine development decision. Mandilla has been growing quickly. We've added 1 million ounces of resources in 3 years. This continued growth will provide the critical mass for a standalone mine development. The Mandilla Gold Project now consists of 4 deposits. Thea represents 85% of the resources. It grew rapidly during the last update and will be back drilling at Thea within the quarter. EOS is our high-grade paleo channel with the potential for mineralisation to extend into the fresh rock. And Hestia, that's our newest discovery. It's on a separate shear zone and we've got mineralisation extending over 1 kilometre. The RC rig will be moving from Feysville to Hestia this week. Now, we drilled 45,000 metres last year. 6,500 metres of that was into Thea, and of that, 5,300 metres was actually diamond drilling. I spoke previously about how we're becoming more efficient in drilling, and perhaps a good indication of that is the 18 diamond holes for that 5,300 metres that we drilled last year. We averaged 97 gram metres. On our typical geology plans, we use a purple dot to indicate a hole of more than 50 gram metres. So on average, those 18 holes almost double that. And you can see it in some of these drill results: 25 metres at 10.6, 32 metres at 5.4, 4 metres at 24.6. And then moving on to EOS, the infill and extensional drilling there has also demonstrated the high-grade nature of this paleo channel deposit, with 3 metres at 11.9, 2 metres at 13.4, a metre at 17, and a metre at 12. And then finally moving on to Hestia, the high-grade portion of this, which to date has been defined on a sectional drill spacing wider than 80 metres. So we actually haven't even been able to get into the resource yet. We've got high-grade hits such as 6 metres at 7, 1 metre at 26, and 2 metres at 5.7. These aggressive drill campaigns have certainly delivered through 2022. Now, all that 45,000 metres of drilling led to the completion of Astral's 4th mineral resource estimate at Mandilla in 3 years. The illustrations that are on this slide at the moment depict the block model and the pit shells for the December 22 update, and they compare it to the previous January 22 update. Some important points to note: the lower cutoff here is 0.39 grams per tonne, and the gold price assumption is $2,500. These have not changed since our first MRE update back in May 2021. So we have not grown the ounces by lowering the cutoff grade or by increasing the gold price. This has been achieved through genuine exploration growth. Secondly, you should notice only moderate changes in the Thea pit design. The pit volume at Thea increased by 22%. However, we actually added 220,000 ounces from that 6,500 metres of drilling. And the inferred ounces actually increased by 49%. In fact, at Thea, when you get the new resource block model and you overlay it against the previous pit shell, our tonnes within that pit shell increased by 9%, the grade increased by 5%, and the ounces increased by 14%. We actually found 14% additional metal within the same January 2022 pit shell. For us, this is further confirmation of the improved drilling efficiency as a result of our increasing geological understanding. Thirdly, at EOS, that increased significantly from the infill and extensional drilling that we completed there. We got 190% growth in ounces and a 33% increase in grade. And then finally at Hestia, we declared our maiden mineral resource here. More importantly, there is over 1 kilometre of mineralised strike. And as you can see in the image, there is already significant unclassified mineralisation, which we couldn't actually classify into inferred resources this time, simply because the drill spacing is greater than 80 metres on section. We absolutely expect that Hestia will be able to grow in scale and grade with the upcoming RC drill program, again, which is programmed to actually start within the next few days. So in terms of modelling, the methodology for the Mandilla MRE is unchanged from our first update. We've got leapfrog wireframes, which were created at 0.05 gram per tonne, and that's to separate waste from the weakly and strongly mineralised zones, and these were then exported into data mine. Again, we've tested multiple indicator kriging and the localised uniform conditioning as modelling techniques, and LUC remains our preferred modelling tool for generating a conservative estimate of the actual gold that we have in the ground. Now, the increase in drill density and the improving drill efficiency has allowed the geostats to support a slight increase in the applied top cut, which at Thea now stands at 40 grams per tonne in the fresh rock. As I indicated before, the pit optimization has been conducted using a gold price of $2,500 per ounce. Our wall angles are based on detailed geotechnical analysis, and they vary based on the deposit, the wall orientation, our rock type, and the weathering state. We are expecting further growth at Thea, and we have a significant extensional and infill drilling program to be undertaken there over the next 6 months. Again, moving on to EOS, this isn't closed off from a paleochannel perspective, nor have we been able to determine the source of the paleochannel mineralisation. There is potential for fresh rock mineralisation to exist at EOS, and if it can be an analogy to Thea, then there may well be a significant fresh rock resource that abuts the paleochannel, just like we've got at Thea. We are yet to test this theory. And finally, at Hestia, the mineralisation has been demonstrated over 1,000 metres of strike length, and the RC rig will be moving in the next couple of days. Now, I've only got 2 sections which I just want to show you. These sections were in the same, or are the same sections that we have in the mineral resource announcement, which we published in December. This first one here is a cross section, and it's looking at a central portion of Thea. It shows how we have grown the MRE on the western flank. And as a result of widening the mineralisation at the base there, it allows the pit optimisation to actually drive deeper. And that's converted gold mineralisation from unclassified into further resources. The second section is a long projection of Thea. And again, it shows the benefit of the increasing drill density and how the newly identified mineralisation has allowed the pit optimisation to drive deeper and convert those unclassified material into mineral resources. Now, over the last 18 months, we've doubled the resource at Mandilla from 500,000 ounces to 1 million. Over 3 years, we've actually added 1 million ounces at Mandilla, and we have significantly more drilling to do over the next 6 months. But we're now also in a fortunate position to turn some of our attention towards Feysville. So as a bit of a reminder on Feysville, Feysville is 14 kilometres away from the 92 million ounce Golden Mile deposit. This stretch of land from the Super Pit south to St Ives is the most gold endowed stretch of land that we have in Australia. And we announced in December that we had grown our tenement package there from 11 square kilometres to 27. We have a mineral resource at Think Big of 3 million tonnes at 1.3 grams per tonne for 116,000 ounces. And all of that is hosted at that Think Big deposit. Remember, Feysville is only 50 k's away from Mandilla, so as a low case, any 1.3 gram per tonne material or higher will comfortably truck to a centralised processing hub at Mandilla. And this can help us to accelerate our build-up to that necessary critical mass that will fund a successful standalone mine. And looking at some of these grades here, we've certainly got some tantalising opportunities for us to follow up. At Think Big, 10 metres at 10, 10 metres at 8.2, 17 metres at 4.9, 54 metres at 1.8. At Saintly, 4 metres at 49.8 grams per tonne, 3 metres at 47.6, and 21 metres at 2.7. Rogan Josh has delivered 6 metres at 8, 4 metres at 5.4, and 2 metres at 14.3. And then between Ethereal, Camperman, Dalray, and Hyperno, we've got 9 metres at 10, 13 metres at 9.1, 6 metres at 10, and 10 metres at 2.9 respectively. So just prior to Christmas, we'd started our diamond program. We drilled four diamond drill holes, and the diamond and RC rig have now been back on site at Feysville for over 2 weeks now. The first phase program at Feysville includes a 9-hole, 1,500 metre diamond program and a 25-hole, 2,500 metre RC program. We are targeting the primary gold deposits below the known enriched supergene mineralisation that we've already identified. And we're also testing down plunge and a long strike from the many historic underground mine shafts that dot the landscape at Michelangelo, Mont Vesuvio, and Rosina. So to wrap all of this up, put simply, we have a genuine 1 million plus ounce deposit in the heart of the goldfields. It's no longer about if Mandilla is going to be developed and mined, but when. There are no other deposits of this scale between Kalgoorlie and Norseman and 100 kilometres either side. This location has a strong history of successfully commercialising gold deposits, and we absolutely expect Mandilla to be no different. Our latest mineral resource estimate returned an additional 250,000 ounces of gold at a discovery cost of $16 per ounce. We have over 20,000 metres of RC drilling planned and another diamond program to go, and that's going to keep us busy for the next 6 months. And we expect this drilling to continue to yield further growth in our resource base. And then there's Feysville. There's a number of opportunities of high-grade enriched supergene, and these will supplement the Mandilla process plant. However, our initial focus is to determine the fresh rock gold opportunity first. This area has been known to produce some very high-grade deposits in the past. The historic Triumph pit, which is only 4 kilometres south of Feysville, has so much free gold in that when they were mining it, they would actually set off the metal detectors at the South Kalgoorlie process plant. And those metal detectors are actually tuned to protect the cone crushers from scrap steel. And finally, whilst I don't make this comparison very often, given the gold endowment at Mandilla, its location in the gold fields, and the likelihood of development, I would say we are certainly undervalued compared to our peers. So thank you very much for listening, and I'm happy to take on any questions. Back to you, Nicholas.
Thanks very much, Mark. That's a great story, particularly in the current gold environment. Just a reminder to everyone listening, please use the Q&A tab on your webinar browser and fire in your questions, and we'll put them to Mark. Mark, if I could just start with a broad question here. So we talk a lot about critical mass in the presentation. You've achieved regular resource growth over the last few years. Can you give investors a sense of what critical mass would be required for you to go ahead with a development proposition here?
Yeah, Nicholas, I think with the changing cost environment that we have here for gold mining at the moment, or certainly mining generally, our number before was probably in the vicinity of 600,000-700,000 ounces of reserve. And most recently, I heard a presentation from Mark Ducler from Ramelius, and he indicated that they're targeting 1 million ounces before they go towards production for their most recent M&A acquisition. And I'd suggest 1 million ounces is where we would need to be. Given we're at 1.15 million ounces, 1.03 specifically at Mandilla, I'd expect our conversion rate from resource to reserve to probably be in excess of 80%, especially given that we're doing our optimizations at $2,500, which is pretty conservative in the current gold price. So I don't think we need a tremendous amount of additional growth in resources, but then we'll need to focus on converting the inferred into indicated.
Okay, thanks, Mark. Another question here from an investor. Can you give us a sense of the scale of the opportunity at Feysville? You know, there's some pretty impressive historic numbers there at that appropriately named Think Big prospect. You know, 10 meters at 10, 10 at 8.2. Can you give people a sense of how big that deposit could potentially be without getting yourself in trouble with the ASX?
Yeah, well, look, I think the great thing about Feysville at the moment is we are really confident of our ability to just on the supergene enriched mineralisation alone to add the critical mass to Mandilla so that we can move towards a production decision. And then from a fresh rock perspective, anything that we find beneath this supergene is going to be an absolute bonus. So it's certainly early days for us in the fresh rock, but geologically, it's a very interesting piece of ground. It abuts Northern Star to our immediate north. And as I said before, that corridor, which hosts the Golden Mile deposit of 92 million ounces, the 20 million ounce St Ives camp to the south, New Celebration, which is a plus 3 million ounce camp. I mean, we're certainly in a really good location to get some significant opportunities there.
Thanks, Mark. We've got some online questions coming in. Thanks, everyone, for firing those in, and please keep them coming. The first one here from Cameron Judd. How much open pit material does St Ives, one of your neighbours, still have? Do you know?
Look, off the top of my head, I don't know. I'd expect their next mineral resource statement to come out in the next couple of months. However, the one that they released in that, I think it was May last year, indicated that they were doing a final cutback. So I think their total resource position was 286,000 ounces in open pits last year. And of that, I think they were only mining one of their pits, which I think was Neptune. So I'd suggest that they would be becoming hungry very soon.
Okay, thanks, Mark. Interesting. Question from John Forward here over in Melbourne. Can you tell us what geological analogies of gold in granite Astral is using for Mandilla, please?
Thanks for a geological question, John, and you're asking that of a metallurgist. Look, to be honest, we're not actually focusing on any other analogies for Mandilla. We've done some recent geochemical work, which is potentially changing the way we're thinking about Mandilla, and we've got another session early in February to determine whether it does change our thinking and how we go about drilling. But our understanding now from recent geochemical work is that entire intrusion does have a background in gold mineralization, and it's been remobilized potentially into the roof of the granite, and then that granite has then been turned on its side, which gives us the prospectivity on the western flank. So it means we really do have to think about what's the potential scale, because we know south of the dike, the current geological maps indicate that that intrusion sort of does close off there, but some of our recent geochemical work suggests that the intrusion continues. So there is potentially some significant scale for us to continue to work on there at Mandilla.
Thanks, Mark. Just a sort of related question, just on the exploration potential at Mandilla. Where do you see the most upside in the deposit, or which of the 4 deposits offer the most upside?
Well, Thea is 85% of the resource, and 6,500 metres of drilling there yielded 220,000 ounces. So Thea is certainly where we want to continue to focus. But Hestia presents us with an interesting opportunity because it's a new shear zone, and we're only just starting to understand what the scale is there. And then given the prospectivity of that entire western flank of this Mandilla intrusion, EOS presents an opportunity there as well, because fundamentally Mandilla started as a paleo channel, and then a very significant fresh rock resource has been discovered abutting that paleo channel, and potentially there's the opportunity to repeat that at EOS.
Thanks, Mark. A question here from Barry Henderson. Can you please highlight milestone dates this year, i.e. further resource updates, or do you proceed to PFS? If so, when?
I think the decision on proceeding towards a pre-feasibility, there's probably something we'll look to make in the next couple of months. I mean, we're doing a lot of that background technical work so that we can move relatively quickly. But even when I say relatively quickly, I'd still suggest that's a 6-month time frame from us pushing the button on a pre-feas to get all that data right. In terms of milestones, we certainly would expect to do another mineral resource estimate prior to the half year, and potentially that would be at Feysville and Mandilla, because the work that we're going to do at Hestia will very quickly convert that unclassified mineralisation into resources. So we know we're going to get a pretty easy little bump there as well.
So that would be a mid-year resource?
Yeah, we'd look to do an update for potentially both Feysville and Mandilla prior to the mid-year.
Just on that, while we're talking timelines, Mark, one of the frustrations in the last couple of years has been assay turnaround. Can you give us a comment on that?
Well, look, we're only just putting in samples again for the new year. We've had a really good run with the actual photon analysis, which is what we use for gold, and we'd expect that to continue. So within the range of 2 to 4 weeks, and if we put a priority on it, we can certainly get it within 2, but we pay extra when we start prioritising assays. But at Feysville, we'll actually be doing quite a bit of like an ICP read and looking at base metals, because there are some base metal opportunities there. And I'm not sure what the turnaround time is when you start doing a 4-acid digest and an ICP read. And we'll only get a sense of that in the coming weeks as we're submitting our Feysville samples.
So have turnarounds improved towards the back end of last year?
Look, we had a terrible time in 21. I think we actually had relatively good turnarounds during 2022. And so I can't fault the performance of our labs, especially on the photon analysis. As I said, I can't comment yet on how we're going to turn around the ICP and the 4-acid digests.
Thanks, Mark. Follow-up question from Barry Henderson. He asks about your cash position, having raised funds last year. What is the expenditure profile for this year?
With us drilling at the moment, I mean, obviously, as we start to drill, we'll spend just under $1 million a month. So our spend is going to take us towards needing cash at some point in this first half of the year. Once we move the diamond and RC rig to Mandilla, we'll be single shifting the diamond and the RC rig. That's just the way the resourcing is positioning at the moment in the industry, but it also allows us to keep on top of it and manages our spend. So we are a pre-revenue company. So the standard answer is yes, we'll be looking to raise capital, and it'll be sometime in the first half of this year.
Sure. Follow-up From Cameron Judd, is there any potential to grow your tenement package around Mandilla? It's a good question because it's quite a discrete tenement package. What are the opportunities there, Mark?
Look, as some of the tenements come up on our east, we're obviously looking at opportunity grabbing those. I mean, we had people out there at midnight towards the end of last year picking up tenure as it actually expired, and if any of those opportunities present again, we'll look to do the same. And then from an M&A perspective, we're always on the lookout to see how we can add value to Mandilla by looking at those tenement positions that exist to our west and south, and we'll continue to do so.
Thanks very much. Just a couple more, just to sort of round things out from a strategic perspective. Have you considered any toll treatment opportunities, given your proximity to Kalgoorlie and a number of operating mills?
Given the scale of Mandilla really does deserve its own asset or access to a very significant size process plant. So let's call them the normal suspects of toll treaters have processing infrastructure capacity of less than 1 million tonne per annum or thereabouts, and you can't monopolise all of that capacity. So all the likely suspects wouldn't work for Astral, and we wouldn't spend too much effort pursuing those opportunities. But if there's an opportunity at a much larger processing plant, then we'd certainly be keen to look at that opportunity.
So the main focus is just delivering more growth in that resource inventory.
Yeah, and building the critical mass so that we can actually do it by ourselves, because you'd want to be putting 2.5 million tonne per annum into a process plant to generate that 75 to 100,000 ounces per annum worth of gold production. And yeah, there's no toll traders that have that capacity.
Thanks very much, Mark. I think we've covered off most of the questions, unless anyone wants to fire a final one in. But Mark, I think maybe, look, you've given us a pretty good overview. Perhaps if you just want to wind us up with a couple of closing remarks about why Astral is something investors should look at over the next little period.
Yeah, look, I think if you compare companies on an EV per ounce basis, and certainly you think about where Astral's ounces are in the heart of the gold fields, in an area that historically has always been able to commercialise those gold discoveries, I think our ounces are very, very cost effective compared to our peers, and on that basis alone, there is almost no downside risk and only plenty of upside. And on that, and for that reason, it's a compelling investment.
Only upside, no downside. That's a great way to finish, Mark.
Thanks.
Thanks very much for your time this morning, and look, thank you to everyone for joining us. That was a nice, short, sharp, a simple story with lots of action on the ground, and definitely a stock to keep on your watch list. So thanks for your time, and we'll be in touch with our next webinar very shortly. But thank you everyone for joining us, and have a great day.